What do you think the main driver is of the recent weakness and the recent volatility?
Yeah, so I think the recent weakness is one, certainly a rotation within the market. So, you had obviously all of last year, the growth move, and then toward the end of last year, you moved to some value, and then value is really taking the front seat. So, that means technology is under pressure this year. Some of the other connected areas, and I think even, that probably spills over into some of the crypto as well that you were talking about. So I think that's the change. And also, and connected, I think, is this kind of inflation scare we're in at the moment. So I think those two are really, and, we've had a heck of a run. So add all those together and you got a volatile mixture.
Do you think that crypto matters to the equity market, Bill?
I don't know that it matters directly to the equity market, but I think it's just part of this, risk asset, part of the market. So as I've looked at it, it tends to be very correlated with some of these growth areas in the technology space. Not necessarily a diversifier. It's really, at the moment anyway, it may change, but at the moment, very connected with that area.
Well, you hear these tales of people margining up some of their equity lines to buy Bitcoin and other cryptos as well. If it comes down, some of those things could change and stocks could fall. Either way, let's talk about some of these individual names because earnings have been spectacular. We referenced Target. We'll talk about retail a little bit later on with Stacey Widlitz. Cisco, what are you looking for today from some of the companies that you own?
Yeah, so I expect Target, because of the numbers we've gotten already out of some of the other retailers, to just post very strong earnings. I think that's, again, you combine the stimulus with, some, again, we had a setback in some of the job gains, but obviously very strong job gains off the bottom, people being cooped up for so long. So, that one I think is pretty good in terms of locked in. I think in terms of the analog devices and Cisco, some of the same, things I think about across there is, how much supply chains might be disrupting them. Cisco in particular, we expect to see some more enterprise spending picking up here as the economy's picked up. So those are some of the things I'll be looking for under the surface.
In general, with the Cisco systems and others, we've had some guests on recently, Bill, that have said they like the old school names. The names that we were talking about 20 years ago doing this, the names like a Cisco. They're not going after the growth. They're going after the consistency of earnings, the reasonable valuation, the kind of steady state of their business. Is that kind of what you're looking for, or is Cisco more of just a one-off?
No, so part of it is Cisco, and some of these older names are frankly cheaper than some of the other stuff. They're clearly more you're, like you said, more consistent in their earnings, and also they've tended, at least some of them, to be a little more cyclical, really, right? So some of that's really is attractive now because, again, Cisco living off of some enterprise spending should get a real boost.
Shepard Smith here. Thanks for watching CNBC on YouTube.